Welcome everybody. Good morning from my side. My name is Martin Froehler. I'm CEO and founder of Morpher, a blockchain company that is incorporated in the United States, but we operate based out of Austria for a couple of good reasons, which I will share with you in the talk. I want to talk today about the power of Web3, what it can do for every one of us in democratizing Web2. Maybe that's it already, but it's actually much more than that, and we are going to see what it all means. So to my background, I'm a mathematician by training. I've worked in quantitative finance for a decade. I've built a startup in Silicon Valley before, and Morpher is now my second startup that has the goal to democratize trading and investing for everyone on the planet. So to make all the traditional markets that we have today, like stocks, commodities, currencies, cryptocurrencies, and even unique or exotic markets, accessible to everyone. So why does Web3 matter at all? What is this all about? Our biggest supporter and investor, Tim Draper, a well-known venture capitalist and crypto bull, believes that blockchain as an invention is bigger than the internet. It is bigger than the Industrial Revolution, and it is bigger than the Renaissance in terms of impact that it will have on mankind as a whole. And I want to make the case today why that is actually the case and why I believe that is true. Blockchain enables the digitization of every asset on the planet. That's in a nutshell what blockchain is all about. And that's a big deal, a much bigger deal than many people realize. The internet enabled the digitization of information and enabled us as humanity to share information with each other, borderless. And blockchain will bring that to the next level. It will allow us to share value globally and digitize every asset. So have a digital representation of every asset on the blockchain. So Web3 is basically the internet of value, and it is a network that grows on top of a network. And that makes it very powerful. It is actually the single technology in the history of mankind with the fastest adoption rate. It is faster growing than the internet is growing. So this chart might illustrate that. It is a logarithmic chart, so it might not look that impressive, but if you compare the green curve and the blue curve, you can actually see that the blue curve is growing much faster. And if you take away the trick that the source here did, the World Bank, and actually fix the intercept of both charts, so move the blue curve up for when we started with our observation, then you will see that the total number of crypto users actually grows much faster than the total number of internet users used to grow between 1990 and 2000. So actually, yes, it is true that crypto and blockchain is the fastest adopting technology in the history of mankind. And it is that because it is a network that is growing on a network. So we are now still in the pretty early days of crypto, and many people might not realize that, but we are here in crypto today and in blockchain today where we have been with the internet in 1998. So before the dot-com bubble, before the big first bust of the internet age, and before it ever became mainstream. So that's how early we still are in blockchain. I want to make a special case to present you a problem that I am working on with my company that solves one particular problem for many, many people on the planet, which is using Web3 for trading and investing. Trading and investing is a huge industry, but it is actually also a very broken industry. So a lot of people on the planet don't have access to the markets yet. We here in the Western world, in Canada, in the United States, in Europe, we are used to having access to all kinds of markets. If we want to trade a stock, we can just open a broker account and trade that stock. So we might not even realize that there is a problem. But despite brokers and even challenger brokers like Robinhood that claim to charge no fees for trading and claim to give everyone access to the markets, trading still remains costly and it remains unfair. And it also remains very exclusionary to most of us. So this is the process that even a trader in the Western world has to go through. So if you have some money and you want to invest it in the markets to protect your account against inflation or to save money for a big expense later, You first have to obviously go through a bank, then you have to find a broker who lets you trade on the markets. Those markets would be hosted by an exchange. And that exchange might not just host individual stocks, but also index funds or other products that are yet issued by another company. So at the end of the day, an investor has to go through 3 to 4 middlemen before they are able to purchase their stock or ETF. That process is very burdensome. It is also very expensive because each of these middlemen charges a fee, obviously, for providing their service. It also creates friction, and middlemen can default. And we have seen what happens if an important middleman, like the Lehman Brothers, defaults. That can even lead to a global financial crisis. On top of that, retail traders, even in the Western world, have the problem that they have a hard time to short the markets. And this is something that is at the moment pretty relevant. It's all nice to invest in the stock market if there is a boom, if the markets are going up. But if the markets are going down, retail traders have a harder time to short the markets and to benefit from markets that go down. So usually retail brokers don't let you do that easily, at least. You also don't have access to markets other than stocks and ETFs, or at least no easy access. Trading commodities requires a lot of money. You need very deep pockets. Those markets trade on the Chicago Mercantile Exchange, and one single futures contract is worth often hundreds of thousands of dollars. So you cannot participate in those markets efficiently unless you have already a lot of money. You can only trade Monday to Friday, 9 to 5. So when the exchanges are open, in my opinion, this is unworthy of the 21st century to be restricted by market hours here for trading. And finally, all markets on exchanges come with finite liquidity. If you want to buy an Apple stock, you can only buy so many Apple stocks as someone else is willing to sell you at that point in time. That's the nature of every two-sided marketplace. So you cannot go around that, you cannot avoid that ever. And we must not forget, the biggest problem is not that it is burdensome for us here in the Western world. The biggest problem is that 80% of the global population does not have access to the markets at all. And I'm thinking of people in South America, in Africa, in most parts of Asia, and even in some parts of Europe, who can only dream of ever trading a Tesla stock, for example. Trading and investing is a huge industry. It is actually, by notional capital at least, and also by revenue generated, one of the biggest industries in the world. Investment funds, exchanges, brokerages, they generate billions, hundreds of billions of fees that they charge from their traders. So these are fees that retail traders, regular people, pay these services to get access to the markets. And still, the industry, despite being so big and so successful and so profitable, is exclusionary and reserved only for privileged people, more or less. So to sum it up, what is the problem with electronic trading today? It is expensive. You have to go through middlemen. Markets are not as liquid as you would like them to be. Limited access. That's also true for people in the Western world. And you need a lot of capital to participate in a market, usually, because there is no such thing as fractional shares so that you can buy half of a share of Berkshire Hathaway or something like that. And you have a very hard time to short the markets. So that is what is broken today with trading and investing. All right, now, if the industry is so broken, why do people trade in the first place? And the answer to that is very easy. 95% of all trades happen because people expect a financial return. It is as simple as that. Only 5% of the trades actually happen because people want to control the underlying good or stock or commodity. So you can see that easily on the futures markets, for example, where the majority of the participants on futures markets does not want physical delivery of the underlying crude oil barrel, but actually rolls into the next contract when the contract approaches expiration. So 5% here is a conservative bet. Also, people who trade stocks usually don't purchase stocks to have a say in the general assembly and to vote on behalf of the shareholders, but they're purely interested in the profits, in the financial returns that this instrument can bring them. So if 95% of all traders only trade for profits, we can now go and use Web3 to give them the profits that they desire without having to go through all the burdens of trading the actual underlying. So that is what I'm working on with my company, removing all middlemen by virtualizing the markets for direct access. We have created a smart contract protocol, the Morpher Protocol on the Ethereum blockchain. And that protocol observes the prices of exchange-traded markets, such as gold or Apple or Bitcoin, in real time, and creates virtual copies of these markets on the blockchain. And via our own native cryptocurrency, our users can place bets on the price development of the markets. And here's how it works in practice. If you have 100 units of our cryptocurrency, of the Morpher token, you can invest it in virtual Apple stock. And if Apple goes up 10%, those 100 token become 110 token. And if Apple goes down 10%, those 100 token that you invested become 90 token. So we replicate the economics of trading the Apple stock on the blockchain, virtually. The underlying stock, the Apple stock, is never actually traded. So this is a pure virtual derivative on an existing market. And the Morpher Protocol simply mints or burns new units of that currency, or destroys old units of that currency, in order to settle the trade for a user. So if your trade with Apple has been successful, and your 100 MPH turned into 110, that means that there are now 10 more Morpher token in existence than before. So the protocol does not only replace the broker and the exchange, but it also replaces the counterparty of a trade. You don't need someone else on the other side anymore who is willing to sell you an Apple stock, because you simply place an instruction into a smart contract, and that smart contract creates the position for you virtually, and it has the power to mint or destroy currency to pay you out to settle the bet. So this does not only remove the middleman, but also the counterparty of the trade. So Morpher is a little more than just a trading platform. We're actually a digital and self-regulating virtual economy. And the Morpher token supply is subject to change in that economy, because as mentioned already, if your individual bet has been successful, there are now all of a sudden more units of our currency in circulation than before. Or phrased differently, if the collective investment success of all traders is positive, our token supply increases. If the collective trading success of all traders is negative, the money supply decreases. So trading success can modify that supply in both directions. There are some things that modify that supply as well, and the one thing that increases the supply systematically over time is operating rewards. I will get to that in a bit, but you can think of it that way. It costs money to operate a protocol like that. We have to pay for live market data, for example. That's one thing. And this is simply paid for by increasing the token supply at a constant, tiny rate every day. The bid-ask spread is something that reduces the supply on the other hand. So if people trade on a regular exchange, you also have the effect that you don't get to purchase a stock that's trading at $100 exactly at $100, but you usually have to pay $100.10. That's called spread. That's bid-ask spread. So that's the difference between buying and selling an asset at the same point in time. And we also have introduced that as a mechanism to reduce the token supply. So the bid-ask spread is not a fee that is collected like it would have been otherwise on a traditional exchange, but this is simply a mathematical instrument to systematically reduce the token supply. So the number of trades together with the bid-ask spread reduce the supply and create stability for the currency, as well as the ability to short creates stability of the currency, because only the net exposure in one direction on any given market can increase or decrease the total token supply. So think of it that way: if 1,000 token are invested in Bitcoin long and 500 in Bitcoin short, only 500 long token can contribute to an increase or decrease of the token supply. And then finally there is an interest rate, and this works exactly the same way as in the traditional economy. If central banks raise interest rates, borrowing money becomes more expensive. We all have to go through that now with the Fed and with also the ECB that will follow in summer. And it's exactly the same in a Morpher economy. So we use old economy tricks to stabilize the money supply in our ecosystem. So whenever the interest rate is increased, it becomes more expensive to trade with borrowed money, with leverage. And this is again not a fee that we charge, unlike it would be in the traditional banking system, but those are tokens that are simply destroyed. Yeah, so overall, we're not just an application, but an economy, and we have to think a little bit like a central bank. Our economy will undergo 2 different phases. This is the adoption phase and then later the steady state phase. And in the adoption phase, we will have a very volatile token supply and token price. This is what we're going through right now. And then as soon as we have mass adoption on a global scale, the token price will become more and more stable, just like a fiat currency, a regular fiat currency. And in both phases, both in the adoption phase and also in the steady state phase, so in 2030 and beyond, we can control the money supply just like a central bank could control theirs by setting the inflation rate and transaction costs respectively. Yeah, we have big goals. So we want to leverage Web3 to become the #1 global platform for trading and investing. And we believe we can do that because we open up the markets to people who currently do not enjoy to have access to these markets. There are really no fees for using our platform because there are no middlemen to pay anymore, no exchanges, no brokers. You can offer all assets on one individual platform. So we can offer stocks, commodities, cryptocurrencies, real estate, everything. You can short every asset because it's just a virtual bet. It doesn't matter. You don't have to own it to sell, and sell it like you would have to do on a traditional exchange. You can trade 24/7. You can trade with leverage. And the biggest benefit of all is probably that you don't have a counterparty anymore. So we do not just eliminate the need for middlemen, we also eliminate the need for counterparties. And that means that you're trading for the first time in history with infinite liquidity. Trading denominated in US dollars or in a stable coin is not yet possible because you receive more Morpher token or fewer Morpher token depending on the outcome of your bet, but this is something we're working on as well. Yeah, as mentioned already, we're another charity, despite bringing the power to invest in the markets to billions of people. There are no fees for using virtual futures, so it is free to use the platform for everyone. But we mint a tiny portion of new token for the company every day, which we use to finance our operation. That leads to an annual revenue or inflation rate of 5.6% of new token that we mint and issue every day. So this is comparable to how Bitcoin or Ethereum also work, where every block that's added to the blockchain comes with a coin-based transaction. And that coin-based transaction is effectively newly minted Ether and newly minted Bitcoin that is given to the miner as a reward for maintaining the blockchain and validating transactions. It's exactly the same in our case. So if you will, our business model is mining. And our annual inflation rate with that business model is at the moment 5.63%. So compared to the dollar or the euro, we're actually deflationary, yeah, in real terms. All right, we are based in Austria for a very good reason. We are a US company and we also have US investors, but we chose to pick Austria as a base of operation pretty much right after incorporation in the United States. We knew that we wanted to operate out of Europe for a very good reason, and that is compliance. In Europe, there exists a legal framework that is valid in all member states, and that clearly defines if an asset is to be seen as a security or a financial instrument in the case of the EU or not. That is not the case in the United States. So in the United States, we have unfortunately regulation through enforcement. That means that you don't know if you're doing something that's wrong until the SEC comes and slaps on your fingers. That is a risk that many crypto companies, including us, don't want to have. So we have chosen Europe for that reason, and we have chosen Austria for a couple of other reasons, like quality of living in Vienna and a great basis and network in Central Europe and a growing tech landscape. So we work in Austria with the regulators. So it is possible in Europe to approach regulators and to discuss business models with them. And we have gotten feedback both from the Austrian Financial Market Authority and also from the Financial Market Authority Liechtenstein. And we also have a legal opinion in Singapore that neither Morpher futures nor the token qualify as financial instrument under current laws in Austria. And the reason for that is very simple. There is no contract between two parties anymore with an obligation to deliver anything, because it is a self-executing blockchain protocol that takes that role. Yeah, our vision is to contribute to a permissionless global financial infrastructure. And I cannot overstate how important that is, in my opinion. Our mission is we want to enable anyone on the planet to trade any asset 24/7 with zero fees and infinite liquidity. So that's our contribution to that greater vision. And our goal is to have 1 million users from emerging markets by 2025. So will Web3 democratize the internet then? Yeah, it can help to do that actually. It can help to bank the unbanked. It can help them to self-bank. It helps everyone by empowering them with permissionless transactions. And again, this is more important in emerging markets than it is in our Western democracies. It is very important that people have the power to send value to someone they interact with or do business with without having to ask for permission. And for the first time in history, and I cannot overstate that again, it is possible to own non-confiscatable property. A house, a picture, gold, money, that all can be taken away at the stroke of a feather. But you cannot confiscate systematically, at least, those assets that you have or own on a blockchain. You can travel the world with your seed phrase in your mind and turn your Bitcoin, your crypto assets in every country on the planet, more or less, into the money that they use there locally. So it's non-confiscatable property, and that's enormous and powerful for people who have to live in dictatorships. So all in all, Web3 empowers 5 billion people to participate in the global economy for the first time. That is why it is so impactful. And that is why, yes, I think you can make the case that Web3 is indeed bigger than the internet, the Industrial Revolution or the Renaissance, in terms of invention for the benefit of humanity and mankind.